Hello, in today's series, we will explore the EV business. Is there potential in investing in EV companies, or is it too saturated? In this video, I will also share with you an EV stock that I think has good potential. Hello everyone, welcome back to SDA Club, the club for stock trading and analysis. This channel is dedicated to providing you with high quality tutorials, guides and insights that demystify the world of trading. Join us as we will share more trading secrets and valuable insights. To stay updated and be the first to access these valuable resources, hit that subscribe button now. By subscribing, you're opening the door to a world of trading and maximizing your potential for success. Before we dive in, here is a quick disclaimer. The information in this video is for educational purposes only. It's not a call to buy or sell. Now, let's try to get a good grasp of the EV economy today. Almost 14 million new electric cars were registered globally in 2023, bringing their total number on the roads to 40 million, closely tracking the sales forecast from the 2023 edition of the Global EV Outlook. Electric car sales in 2023 were 3.5 million higher than in 2022, a 35% year-on-year increase. This is more than 6 times higher than in 2018, just 5 years earlier. In 2023, there were over 250,000 new registrations per week, which is more than the annual total in 2013, 10 years earlier. Electric cars accounted for around 18% of all cars sold in 2023, up from 14% in 2022, and only 2% 5 years earlier, in 2018. These trends indicate that growth remains robust as electric car markets mature. From January to March of 2024, nearly 1.9 million electric cars were sold in China alone, making an almost 35% increase compared to the sales in the first quarter of 2023. In March, EV sales in China surpassed a share of 40% in the overall car sales for the first time, according to retail sales reported by the China Passenger Car Association. As witnessed in 2023, sales of plug-in hybrid electric cars are growing faster than sales of pure battery electric cars. Plug-in hybrid electric car sales in the first quarter increased by around 75% year-on-year in China, compared to just 15% for battery electric car sales. This makes China a potential for EV makers due to the consistent growth. Among all EV makers globally, BYD stands out. Let's understand more about the rise of BYD as a global EV leader. BYD, the Chinese electric car maker, has reached a remarkable milestone. BYD's growth story grows well beyond China's borders. The company now leads EV sales in Singapore and Thailand, while Chinese EV dominate about 75% of Southeast Asia's market. BYD's soaring wind comes from its wide range of vehicles and groundbreaking battery and hybrid technologies. The affordable models start at around 69,800 yuan in China. BYD's path to outperform Tesla in 2024 involves state-of-the-art technology, smart market strategies, and global expansion plans. We will take a detailed look at these factors that propelled BYD to the top spot. This remarkable growth has also piqued the interest of the world's top investor, known for his ability to identify great companies selling at a fair price, Warren Buffett. BYD's story speaks through its numbers. The company sold 4.27 million new energy vehicles in 2024, which shows a substantial increase of 41.26% from the previous year. Here's how the sales break down. Battery electric vehicles sales contributed 1.76 million units, while plug-in hybrid electric vehicles or PHEVs contributed 2.49 million units. I believe that the demand for their vehicles should continue to grow. BYD's influence has also grown in markets of all sizes. The company now holds an impressive 22% of global EV sales. The company's success comes from its strategic approach to different market segments. BYD's strong presence became clear in Q3 2024 when it generated revenue of 201 billion yuan or $27 billion USD. The competitive landscape reveals some interesting insights. From this table here, we can see that BYD is catching up with Tesla on units sold and revenues for both 2023 and 2024. BYD's domestic market performance stands out as the Chinese government trade-in programs and strategic pricing have played a vital role. The company's PHEVs or plug-in hybrid EVs segment has shown explosive growth, with sales rising by 54% year over year. These two giants compete more intensely now, especially as BYD's aggressive pricing and expansion strategies continue to show results. Tesla still maintains a slight edge in pure battery electric vehicle sales, though the gap has narrowed substantially compared to the previous years. Let's now look at the innovation and technology leadership at BYD. What has it been doing to stand out among its competitors in terms of innovation? BYD has made remarkable breakthroughs in the Chinese electric car industry and now stands as the vanguard of this wave of progress. Here's how this manufacturer has transformed EV technology with its groundbreaking developments. BYD's success comes from its breakthrough blade battery technology. This innovation has set new safety standards in the industry. The blade battery proved its exceptional resilience in rigorous tests. It's kept surface temperatures between 30 to 60 degrees Celsius even after nail penetration. The battery passed several extreme conditions, from being crushed and bent to heating in furnaces up to 300 degrees Celsius and overcharging by 260%. All this proved that BYD's battery quality not only meet global standards for EV batteries, but also cost cheaper to manufacture. Let's look at BYD's proprietary manufacturing processes. BYD's strength also comes from its unique vertical integration approach. The company became the world's first fully integrated EV maker that can manufacture both battery cells and IGBT transistors in-house. These are the two most expensive components in an electric vehicle. The cell-to-pack technology, or CTP, has boosted space utilization by over 50% compared to the conventional lithium iron phosphate batteries. This progress leads to better energy density and improved vehicle performance. The vertical integration approach could also bring down replacement costs, as replacement of batteries are usually very expensive for EVs. BYD's vertical integration strategy has control of over 75% of auto parts production in-house. This complete approach includes semiconductor manufacturing, battery production and assembly, power transmission systems, and construction capabilities for rapid factory deployment. Because of this strategy, BYD is able to maintain a remarkable 25% cost advantage over competitors with this integration, even when producing vehicles locally in their markets. For example, manufacturing costs for the BYD Seal model are 15% lower than that of Tesla's Shanghai-produced vehicles. We now look at BYD's R&D investments and breakthroughs. These impressive metrics show that BYD's dedication to innovation. BYD makes an annual investment of 40 billion yuan or $5.5 billion and currently has 24,000 plus patents under its belt. These patents are BYD's core competitiveness, as competitors are unable to copy these technological innovations. This makes BYD stand out to have an edge against its competition. BYD's research has also created several notable proprietary technologies, namely the blade battery technology, the DM-I super hybrid technology, the E4 platform, and the CTB technology. BYD has also seen remarkable results through its detailed portfolio management strategy that ranges from entry-level vehicles to premium offerings. BYD's pricing strategy shows an exceptional range in the market. The entry-level Seagull costs between 73,800 to 89,800 yuan and serves budget-conscious consumers, while the premium Yangwang U8 sits at the other end with a price tag of above 1 million yuan. This pricing spectrum helps capture various different market segments. The company's 7+4 full market penetration EV strategy has also proven crucial to capturing different market segments. This approach includes traditional transportation, which includes consumer vehicles, buses, taxis, coaches, logistics vehicles, construction vehicles, and sanitization vehicles. And there are niche EVs that also cater to special fields such as warehousing, mining, airport, and port operations. BYD's detailed 7+4 strategy has helped BYD control about one-third of China's plug-in hybrid and battery-powered electric vehicle sales. On the company's production capacity expansion, its global manufacturing footprint grows at an unprecedented pace as BYD increased production capacity by nearly 200,000 units during the August-October 2023 period alone. The BYD Thailand facility demonstrates these rapid expansion capabilities, as it is completed in just 16 months with an annual capacity of 150,000 vehicles, and this created new job opportunities for 10,000 new positions. The facility now serves as a strategic hub to produce right-hand drive vehicles across all ASEAN markets. BYD's supply chain optimization mastery comes from its extensive vertical integration and strategic resource management systems in place. It secures supply chains through direct ownership of battery material sources, in-house logistics operations with a large dedicated shipping fleet, and simplified processes for rapid adaptation. Export volumes reached up to 243,000 vehicles in 2023, showing a 337% year-on-year increase. BYD maintains exceptional quality standards while optimizing costs by controlling over 70% of its supply chain. To name just one example, its assisted driving system will cost less than Renminbi 3,000 to manufacture, while the industry's production standard of the same system will cost around 20,000 Renminbi. This is a vast difference in cost, and competitors will find it difficult to compete with the BYD structure. BYD also recognizes that different markets require unique strategies. The company was among the first Chinese brands to offer right-hand drive electric vehicles, which proved vital for successes in Singapore, Malaysia, and Japan. Local partnerships form the backbone of BYD's distribution strategy. It has worked with Dabi Motors in Malaysia and partnered with Saga, Brazil's largest dealer group, to market and distribute its vehicles. The Brazilian market now has over 24 BYD brick-and-mortar dealerships with plans to reach 100 by year-end. BYD's regional expansion strategy has already begun to show impressive results, with overseas sales growing by leaps and bounds year-on-year. In conclusion, BYD's remarkable trip from a battery manufacturer to the world's leading electrical vehicle maker shows how Chinese state-of-the-art technology and strategic planning excel. The future looks bright for BYD as the leading electric vehicle manufacturer. Their ongoing commitment to state-of-the-art technology, budget-friendly manufacturing, and market growth shows this success will keep rolling into the future and could become a leader in the EV business. TipRanks.com indicates a 12-month target price of Hong Kong dollars 375 for BYD. Since BYD is currently trading at Hong Kong dollars 274, this translates to a discount of 27%, making it an attractive investment opportunity to consider. Till then, thank you and see you in my next video. Goodbye.